Not all stocks create wealth. Some are designed to drain it. Many investors unknowingly invest in sectors where government control, price regulations, and policy uncertainty make it impossible to generate wealth. Today, I'll reveal 5 sectors and related stocks you must avoid for long-term wealth creation. And stick around till the end because I'll share a golden rule to spot these traps before they destroy your portfolio. So, smash that like button, hit subscribe, and let's dive into today's game-changing sectors and stocks to avoid. Power distribution and utilities. Power tariffs are heavily regulated, companies can't freely set prices, state-owned discoms are always in financial trouble due to government subsidies, payments from state governments get delayed, affecting cash flows, requires huge capital investments but gives low returns. Examples of stocks to avoid from power distribution and utilities. NTPC lacks pricing power due to government controls, limiting its wealth creation potential. Power grid regulated tariffs and limited growth avenues cap its long-term wealth creation potential. Tata Power. Though Tata Power had given decent returns in the past, future returns could be volatile returns due to regulatory risks. Public sector banks, PSBs. Government-owned banks equals to political lending, huge NPAs, bad loans, as they lend under political pressure, dilution risk, government keeps infusing capital, reducing shareholder value, low profitability compared to private banks. Examples of stocks to avoid from public sector banks, PSBs. Punjab National Bank, one scam after another, never recovers. Bank of Baroda struggles with NPAs and frequent government interference. SBI, largest PSB, but still underperforms private banks like HDFC and ICICI. Telecom, post-Jio disruption. Cutthroat price wars, leading to thin profit margins, high spectrum costs and government-imposed levies eat into earnings, few players survive, and even they struggle with profitability. Examples of stocks to avoid from telecom, post-Jio disruption. Vodafone Idea, massive debt, survival is uncertain. BSNL, MTNL, outdated and constantly on government life support. Airtel, despite being a leader, profits are unpredictable due to price wars. Oil and gas, PSUs. Government dictates fuel prices, so companies can't pass on costs. Subsidies and price caps limit profitability, or price fluctuations create massive volatility. Examples of stocks to avoid from oil and gas, PSUs. ONGC, share price moves nowhere for years. BPCL, despite being a big company, profit margins are weak. GAIL, dependent on government pricing policies, limiting growth. Airlines industry. High operational costs, low profit margins, fuel prices fluctuate, but airlines can't always pass it on to customers, extreme competition and constant losses over the years. Examples of stocks to avoid from airlines industry. Air India, government had to privatize it after years of losses. SpiceJet, constant financial troubles and cash flow issues. Indigo, the best among the worst, but still struggles with profitability. The golden rule, how to identify wealth traps. Before investing in any stock, ask yourself, does the company have pricing power? Is there limited government control? Are profit margins consistent and growing? Is the industry free from frequent policy changes? If the answer is no, stay away. Want to know the best sectors for long-term wealth creation? Comment below with yes, and I'll make a video on the best sectors and related stocks to invest in. Don't forget to like if you found this useful. Subscribe for more powerful insights. Share with your friends who are investing in the wrong sectors. Let's build wealth the smart way. See you in the next video. Until then, happy investing.